Snowflake, a technology company, has its IPO priced at $120 a share, but on the opening day, it more than doubled in price because of high demand. Some of the early investors made tons of money and others scrambled to buy it on the IPO day, propping up the demand and thus the price. I'm going to explain this in the next 8 to 10 minutes, so I suggest you guys to watch this till the very end. If you like it, just make sure you press the like button and don't forget to subscribe, as it will help my channel with the YouTube algorithm. Hi, my name is Sunny and welcome to my channel Sunnysnippets. Here, I try to declutter some of the latest news, make it simple to understand so that my audience is well informed. Snowflake is a cloud-based data storage and analytics service company founded in 2012 in California. It allows users to store and analyze data using cloud-based hardware and software where the customers can exchange and transfer it securely. It is also called Data Warehouse as a Service. Snowflake is growing rapidly by providing technology that allows clients to quickly analyze and share huge amounts of data with flexible capacity when required on the cloud. It offers a different business model which is not dependent on the databases tied to a hardware. On 16 September 2020, Snowflake had its IPO at $120 a share on the New York Stock Exchange. Snowflake sold 28 million shares and raised about $3.4 billion from this IPO. This made it the largest software IPO in a very long time. It was priced at $120 a share on IPO, which is on the higher side of the earlier expected range of $100 to $110 a share. It now trades on NYSE under the symbol SNOW. With the backing of Salesforce and Warren Buffett's Berkshire Hathaway, it more than doubled its share price on the first day of trading. With such a strong demand for the stock, it opened at $245 a share and rapidly went to over $300, more than doubling the IPO price. At its closing price of around $250 a share, Snowflake is valued at $70 billion, making it worth more than the established companies like Walgreens and Travelers. It disclosed last week that Salesforce, which was recently added to the Dow Jones Index along with Warren Buffett's Berkshire Hathaway, would each buy $250 million of Snowflake stock in a private placement. With Snowflake's revenue more than doubling in the past 6 months to about $240 million, the company posted a net loss of about $170 million. This loss is slightly less than it had an year ago. With a huge demand for the stock, the big IPO gave the company a market cap of roughly $70 billion. It is more than 5 times the private placement value of $12 billion that it fetched in early this year. It has generated about $400 million in revenue over the past 1 year, thus giving it a market cap to sales ratio of about 175 times. Zoom which was considered the most expensive technology stock by many metrics, is just half of Snowflake's market cap to sales ratio of about 87 times. This gives Snowflake an eye-popping rich valuation. It seems to make other frothy technology names look cheap by comparison as far as valuation metrics are concerned. As the price of the stock skyrocketed on the first day, some stock analysts are pointing towards a missed opportunity. They are pointing that Snowflake could have raised more capital if it had priced the stock according to the price the broad market is giving it. This figure is around $3.8 billion according to some experts. It is the money left on the table in addition to the money it raised in the IPO and the private placements. They are saying that this extra capital could have otherwise been invested in the business. Another school of thought is that this extra money left on the table could have been left intentionally for the retail investors. The thinking could be that this will encourage retail investors to stick around with the company for a longer period, which in return will give the stock a price stability and less volatility, helping the company in long term. Shares of Snowflake were down about 10% a day after its blockbuster IPO. That has brought down the market cap of the company to about $63 billion at the close of the trading day. Warren Buffett's Berkshire Hathaway has bought $250 million of common stock of Snowflake in a private placement. It has also bought an additional $320 million worth of Snowflake shares in a secondary transaction. Therefore, Berkshire made a total investment of about $570 million at IPO price of $120 a share. This investment hardly made any dent on the cash pile of about $145 billion that Berkshire has on its books. With the surge in the stock price on the IPO day, Berkshire made over 100% return on their investment in a single day. This investment return will add more to the cash pile of Berkshire, which is a good problem to have. This is my take, where I have tried to declutter the IPO of Snowflake's the newest technology company. As a disclaimer, get a professional advice from a financial advisor before investing, as I am just a random guy making YouTube videos. If you have found value in the content that I make, please help me and my channel by subscribing, liking and sharing it. Press the notification button to get notified about the latest videos that I make. Thanks for watching. See you next time on your channel, Sunnysnippets.